Let's get across the market open. Jimmy Jang joining us from GPA Capital. Jimmy, welcome to Tuesday. We saw a very strong opening session for the week on Wall Street. Clearly, investors buoyed by the prospect of a rate cut coming in December.
Morning, Andrew. Yeah, you put it the best. We had a really strong day in the US, and what kind of really drove that tone was in particular from my analysis, is that dovish commentary from the New York Fed President John Williams, which kind of boosted that expectation that the Fed may begin gradual rate cuts starting from early next year. And the shift in rate expectation for the December rate cut has also changed. Just about last week, there was a little less than a 50% chance of a rate cut in December. But now with these job data coming out and the sentiments that the other Federal Reserve Committee members are showing, like New York Fed President John Williams, is now kind of coming back on to potentially see another rate cut in the US in December. So that's obviously playing that big role, and a lot of investors are turning on that risk on mode. So a lot of the tech sectors obviously had a really good run, and a lot of AI thematics has came back again as well.
What are we seeing locally, Jimmy? Look, we had a good session on Monday. Further gains expected today?
Yeah, a really good gain to kind of see another, obviously back off this rally that we saw in the US. And another thing that kind of really kind of coming back to the US part, we actually saw the Trump administration and considering an easing export restriction on Nvidia. So that's why we saw a lot of the AI and the semiconductor index had a really good run, and also the tech sector as well. So we might potentially see that come through in the Australian market. And there's obviously a lot of great M&A activities happening in the local market as well. Obviously, not to mention some of the concerning stocks that we should be carefully eyeing on as well.
Well, let's get into some stock specifics. Look, Drone Shield, that has fallen a long way now, and clearly investors are unnerved by the actions of some of the key executives there, having sold down their shareholds.
Yeah, I mean, the company Drone Shield has released that new update addressing that recent media noise around the directors selling their shares, as you mentioned, Andrew. So CEO Oleg Vornik reaffirmed his commitment to the company and directly addressed the concerns about the directors' share sales. Now, a couple of key points to kind of point out is that in that announcement is the company is conducting that independent review of their disclosure and trading policies. And they clarified that employees only sold newly vested shares. So what that alludes to is that the director sales were not an isolated event. So regardless of all this, what we don't really understand as an investor is, first of all, and when we saw that bit of a sharp sell, the company should have made it really clear that the directors are selling their shares not for any other reason but for exercise their option, which was a really great result. They did hit that milestone of their revenue. And another thing they should have done is that, rather than, just coming out of the dark and really spooking the market, they should have done this in a lot more better fashion. And it's not uncommon. We see directors selling their shares to, fund their taxes or even to exercise the options as well, performance options. But, this kind of aggressive sale is something that we just haven't seen that, clearly. And that's why, the market has really penalized and just kind of scrutinized the company, and the media is, with their own rights, really criticized the company as well. So, not a good look, and it's something that will be very difficult to recover from unless we see something really big, pipeline from the company.
Now, Jimmy, you mentioned M&A action at the moment. That was headlined by a move by BHP, which went nowhere yesterday again for Anglo American. But more locally, I guess, we got the action there for Monash and also Cube.
Yeah, a huge day for Monash yesterday. So Genesis Capital and Saul Patterson as a consortium made an indicative 80-cent takeover offer. So that represented, before the rally, about 31% premium. So before that offer, the consortium actually bought about 23 million shares, which equates to about 6%. So they lifted their holding to almost 20%. So the what really kind of appraised the company was that the board actually rejected the proposal, and they called it as opportunistic, and it's well below the sector precedent. So that obviously boosted some kind of confidence to the company. Obviously, the company has been struggling for a big time after these major incidents that twice that happened to the company throughout the year. But the fact that the company has rejected this offer is kind of regained some confidence for the investors. So just to kind of break it down, the bid that Saul Patterson and Genesis Capital has made as a consortium, it kind of implies that it's about 7x7 EBITDA, which is pretty significantly undervalued because majority of the deals is typically priced at around 12x. And so that kind of puts the company confidence that shareholders are obviously watching that two things. So Saul Patterson is obviously eyeing on the company, and also the fact that management has confidence that they have the ability or at least some kind of plan to bring the share price back up to where it was before these incidents. So that was a really good kind of confidence that we saw from the company.
All right. So how are you viewing Pro Medicus at the moment, Jimmy? It's more contract wins out of the States.
Yeah, Problematic is probably one of the main stocks that hasn't really kind of failed a lot of the investors expectation, and it kind of executes extremely well. So at the AGM, like you mentioned, Andrew, the company has announced 3 new full stack deals, which is worth about $29 million. And that implementation happens within 6 months. So there's a full kind of expectation of the revenue impact to begin in the first half of 27, potentially. So what that really mentioned is that, Prometheus is executing these deals, and, over the next 5 to 7 years, this is something that's going to be, even more greater and there's going to be a lot of compound revenue with the new contract also potentially coming in as well. So for those viewers that are holding on to it, it's excellent news. But for the people that's been on a watch list, I think this could be another really good confidence to really slowly allocate into their portfolio.